the way to the bottom, see the word petitions, and sign it. Sign the one that says Ann Baker. Thank you. All right, so today we're going to talk about credit cards and why a good credit score is important. So, if you're anything like me, in the past, I cared nothing about credit. Like, so what if I didn't pay this hospital bill? So what? Who cares? Right? Are any of you out there like that? Well, that was in the past. This is now. So I'm going to explain why a good credit score is important. All right. Now, some of the people who watch the channel, I run into them in person and they tell me, I already have a good credit score. My credit score is 800. I had a woman tell me her credit score is 800. She watches the channel. I had a man tell me, I have a good credit score. My credit score is 700. So some of the people watching, they want me to know that their credit score is already good. So, um, congratulations. Where is your credit card business? So, your business, where is it? I will have you on the show, and then you can help the other people raise their credit score. All right. So, some of you already watching, you already have a good score. So, I am going to talk to the people who maybe your score is not so good, but it can be improved. And I'm going to explain why it's important. So, a good credit score is important because when your credit score is not good, you live a more expensive life. So, when you buy things, they're charging you a higher interest rate based on your credit score. For example, you go buy a car. So, you're going to be paying more for this car than someone with a higher credit score, right? Imagine that happening just as you live your life, your entire life. Your entire life is more expensive than someone else just because of those 3 digits on a piece of paper, right? So, a more expensive life. Also, if you choose to go down the real estate path where you are buying property, any home that you live in, you can get that home for 3.5% down payment. So, the down payment can be small if you live in it. 3.5%. They also have 5% down payments now for multifamilies if you live in it. However, when you come to the phase that you decide to buy investment property outside of the property that you live in, they generally want 20% to 25%. Okay, so they look at your credit score. Based on your credit score, you're going to pay a higher down payment than someone else. So instead of that 25%, or instead of that 20%, they're going to try to charge you 30%. So the number is around 680. If your score is less than 680, then they're going for that 30% down payment. As opposed to you paying 20% or 25% if you would just work on getting your credit score above 680. So that's why it's important. They're charging you more everywhere that you go, from down payments to fees to interest rates. So that's why it's important. It's part of the system. Less money you have, they figure they're going to charge you more. Right? That's the system. All right, so how do you get a higher credit score? So, generally, the first step of action is getting in the habit of paying on time. But when you look at the date, pay before the closing date, not the due date. So you can go to your records and find out when the closing date is, or you can actually call and get the closing date. Write that on your calendar, and then you're going to pay before the closing date. The closing date is when they take the picture, the snapshot. So they got the snapshot for that month. All the bureaus, Experian, Equifax, TransUnion. So pay before the closing date, not the due date. So that's important to know. The other things to improve your credit score is they're looking at how much debt do you have. And it's not necessarily student loan debt they're looking at. They're looking at the debt that you are not even thinking about. For example, that furniture you bought a year ago that you're not even thinking about it because you put it on a credit card. For example, Ashley Furniture credit card. If you bought this a year ago and then you're just paying minimum payments, they're looking at that credit card that you didn't pay off. So working on paying that off, paying off the things that you're not even thinking about. Like Ashley Furniture credit card, for example. You have an Apple card somewhere, maybe. They are looking at mortgages. Like if you already own property, they're looking at the amount of the balance of that mortgage. And if you have a HELOC, they're looking at the balance of that HELOC. So they are looking at that kind of debt. And paying down that debt is going to increase your score. So if you take one at a time, say you got the small card, Apple card, for example, pay that off. Take the next one. You got this Ashley Furniture credit card that you're not even thinking about. Maybe you've been paying minimum payments, but it's not high priority. So it's not high priority to you, but this is what they're looking at. This is what is on their record. So get this off of your record. That credit card you're not even thinking about. You pay that off, that's going to increase your score. Now, the larger debt, just take it one step at a time. One step at a time. So you can see how it goes with the smaller debts. Go back and check your score, see how much it was raised. Then work on the larger debts. Right. Chase Bank, they actually have a program. If you have Chase Bank, or what bank do you go to? Seaway Bank, or do you use a credit union? They actually have a program, and it is a program that will show you your credit score on a periodic basis, and they will actually develop a plan for you to raise your score. And you can actually see, like the bank has your information. You can see over the internet online what debts they're looking at. They'll show that to you. So go check it out with your bank or your credit union. It is a credit score plan. Like they'll ask you, what's your goal for 2004, and different ranges you're looking for. Like if you want to get it up by 25 points, do this. You want to get it up by 50 points, do this. You want to get it up by 85 points, do this. And then what's your goal? Like what time frame? 3 months, 6 months, a year. So this is offered to you by your bank. Check it out, because it's interesting that the bank has your credit score, right? They have access to that. So check it out if you get time. All right. So that's really important because it's something that we really wouldn't think about. They're looking at these debts that are of no importance to you. Like maybe you're paying $30 a month on it. You bought the furniture a year ago. Things like that. That's what they're looking at. So knock that off. All right. When it comes to the credit card, they're looking at the balance. They're looking at the balance. So keeping that balance less than 30% is good, but less than 3% is excellent. All right. So let me see here. Let's see. You got let's see. Say your credit card is 5,000. So we're going to go for excellent. So keep it under 3%. So what is 3% of 5,000? That means keeping it under 150. So that means you're making a payment every month before the closing date. This is excellent. This is an example of excellent. All right, say that's a little bit too much. Maybe you got too much going on. You got too many bills. Maybe a layoff happened. It's all kind of stuff going on now. So say you're not trying to be excellent right now, but you want to be good. So good is 30%. So 30% of this is 30% of 5,000 is 1,500. So keeping it under 1,500. So you're paying every month before the closing date. And you know what that date is because you called them or you looked it up online. So say, for example, the closing date is the 15th. So around the 12th, you're looking at your account. Around the 12th, you're looking at your account and you're making sure it's under 1,500 closing date. All right. Out of all of these, the debt, lowering the debt, making sure you're paying it on time, closing date, and low balance. I would say the most important thing is making the debt smaller. Making the debt smaller is going to increase your score. And like I said, start out with that small debt that you're not even thinking about. It is low on priority to you because you already got your furniture. That was like a whole year ago. And that's what they're looking at. All right. So do me a favor. Before you leave, I need for you to hit the like button. If you are not a subscriber, I need for you to hit the subscribe button and notification bell next to it so that you will not miss an episode. Also, leave a comment. Let me know your thoughts. Also, don't forget, before you leave, I need for you to look at this link that I have pinned. I need you to go into the link, scroll all the way to the bottom. You'll see the word petitions. I need for you to sign it. Sign the one that says Ann Baker, and this will take about 2 minutes of your time. All right. So thank you for watching. And before you leave, hit that like button. Have a good day.